Good afternoon, traders and investors. Will back here with another one. Well, guys, another beautiful update in the markets after yesterday's short-term sell-off in mostly technology. Today, coming back in a big way, leading the way was Google and Meta with some very nice gains, and the markets virtually recovering every single loss that happened yesterday, guys. So in today's video, we are going to cover two earnings that we had today, Dollar General and Lululemon. We're also going to go over our major indexes as per usual, and then our major tech names, of course. And lastly, take a look at my portfolio as we wrap up yet another beautiful week here, guys. So without further ado, let's get right into today's video. So SPY up 0.76%, QQQ up 1.4% after being pretty much the loss leader yesterday, recovering very nicely today. Tomorrow, I will remind you that we do have some NFP, the non-farm payrolls job data, which is going to be crucial to gauge a sense of the labor market. Is it still tight? Is it still healthy? We will see tomorrow. And next week, very big week, as a matter of fact, we actually have two major things coming out next week. Number one is going to be another CPI report. So we're going to have that. And then on Wednesday, we are going to get the Fed's updated dot plot, the summary of economic projections, where the Fed sees interest rates for the next year and next few years as well. I will remind you that the last time they released this on September 20th, right here, this led the markets to a very brutal sell-off that continued all the way until the end of October as traders repriced expectations for interest rates. So guys, let's get into today's chapters here right away. So as you can see, guys, on the market here, very nice market performance, mostly led by big tech. And you can see what a beautiful day Google and Meta had. Also some very decent recoveries here in a lot of semiconductors names. AMD almost up 10% on the day. What a outstanding day from AMD. So I hope everybody was able to buy the dips as I've been talking about on AMD for the last week and a half here. But all in all, guys, very decent broad market performance. Only healthcare pulling slightly back, but very good participation from financials as well. On the one-day relative, you'll see here everything obviously led by communication services. That's largely due to Google and Meta. And then everything pretty much in the green except for utilities and energy on a 1 week relative performance here. We have green pretty much across the board, only energy trailing back ever so slightly. But I will remind you, these energy reads, these lower energy reads coming in from pretty much oil and natural gas are going to be very good for the future inflation reports, as you guys see, coming very substantially down since the month of October all the way through now. Oil is absolutely plummeting, which is going to be very good for inflation data reads. So guys, before we get into more technical analysis here, let us do a few earnings. Yeah, and we'll go over these very quickly. So first one is going to be Dollar General. So as you guys remember, if you were here on the channel last week, we did cover Dollar Tree. And one of the main things with the dollar stores was we are looking as are their earnings per share bottom. So these dollar stores have been revising EPS to the downside. Why? Because consumers have been more careful on their discretionary spending. They're not spending as much on little trinkets when which the dollar store makes most of their money. So consumers have been largely spending a lot of their money when they go to dollar stores on essential home items, and those are low margin products. Dollar stores make most of their money on either different things like kitchenware and stuff like that they can mark up ever so slightly, or toys and different accessories, not so much on home essentials like soap and stuff like that. So pretty much we're going to look into Dollar General and see, have they bottomed here after I've been saying that I would be playing these dollar stores more aggressive after Dollar Tree came out last week and pretty much signaled a bottom. Although they had a soft Q4 outlook, they are pretty much saying that the revisions to the downside are kind of finished. So let's see if Dollar General is the same here. On the earnings here, they had a beat. Finally, a beat here, one positive corner on EPS, so they are getting better, and revenue as well was a beat on the dollar store. Let's get into their earnings right away. You guys know that this one is probably one of my favorite plays in terms of the dollar stores. It is currently still about 50% off of your all-time high. In comparison with Dollar Tree is pretty much only about 29% off the all-time high. So Dollar General representing some good, better risk to reward than Dollar Tree in my opinion, and trading at a significant discount as well. Their price to earnings ratio is only trading about 13-14 right now. Even though they have lost a bit of earnings per share here, they are still cheap on a forward basis as well. And we'll show you that, guys. We'll show you that right away here. Let's bring up the forecast for EPS. You will see that they had a few years of outliers. So take a look at this trend right before the pandemic years, right? we have a steady growth of EPS, then ballooning 2020, 21, and 2022. And now 2023, we are getting back to that regular growth. So at least 2023, yes, they revised the estimates down, but it's still better than these outlier years, still better than 2019. And now 2024 also to the upside, 2025 as well. And they are going to still consistently grow revenue. So this company is doing very well, but two problems that the dollar stores did have was their discretionary spending by consumers is not as high, which is driving margins ever so slightly down. And number two is what they call shrink. That is another fancy word for saying theft or loss of inventory. So those two things have been plaguing the dollar stores fairly hard as of lately. So let's get right into the earnings report. Dollar General warns of constrained consumer spending heading into 2024. So they did once again guide the fact that consumers are going to be careful on their spending. Dollar General on Thursday warned of constrained consumer spending, especially in categories such as clothes and home goods heading into the new year, even as the discount retailer beat analyst estimates for the third quarter. The company's shares, which rose as much as 4% in early trading this morning, reversed course and fell nearly 2%. That's what you can see on the day. So they started off very positive, but pretty much reversing almost 6% top to bottom, guys. So that is a fairly decent sell-off. I'll remind you, Dollar General for me, if this stock comes all the way back down into the 120s, I will most likely be playing options on it. I do think it represents some good risk to reward, and I do think we are near the end of the bottoming out cycle for them. Discount store operators have been struggling with a shift in shopper preferences for essentials over general merchandise, while they face stiff competition from large retailers such as Walmart. So here you go, guys. The merchandise drop-off. Its total merchandise inventories were down 1.8% on a per-store basis, but gross margin fell 147 basis points to 29%. So this is almost 1.5% of drop in gross margin, and that's largely due to the consumer shift to essentials over that general merchandise, right? As it grappled with a rise in retail shrink, theft, where inventory is either lost, damaged, or stolen. So unfortunately, once again, Dollar General reiterating the fact that it is being plagued by these things. However, there is a bright light at the end of the tunnel. Dollar General, which reaffirmed annual sales and profit forecasts, says it was expecting shrink-related headwinds to continue into 2024. In October, it cut the full-year forecast for the third time this year. So here is the green light for investors pretty much. They have finally, instead of guiding down for the fourth quarter in the row, now they are reiterating their Q4 guidance, even though they are giving a very shy forecast for 2024. I do believe that they are sandbagging themselves in the process as well, so that they can possibly beat revenue and beat EPS targets by giving out substantially lower guidance here, that they reaffirmed at least now this quarter, they have reaffirmed that the outlook should be on par with analyst expectations here. So after several earnings misses and lowered forecasts, Dollar General is reiterating its outlook, suggesting that it's finally reaching a bottom for earnings for 2023. And last week, rival Dollar Tree trimmed annual sales forecast on weaker spending from lower income households. So out of the two guys, my opinion is that Dollar General does represent the big buy, the better buy, but keep in mind, this recovery story is going to take time. You can see that in normal markets, Dollar General does just fine. So I do think this dip is still a buying opportunity. We are still just waiting for the bulls to set the weekly uptrends in motion and really start recapturing some of these longer term moving averages on the weekly, but pulling nicely off the bottom here, nicely off oversold conditions. And even from the bottom, guys, it doesn't seem like a lot on the chart, but they're still currently up about 30% off of the bottom, still representing some good risk reward from all-time highs. And now we are going to look at our second earnings, which is Lululemon. And Lululemon has had an absolutely fantastic year, guys, coming off the lows pretty much. You can see the lows right here back in January, right? They are up 59, almost 60% on the year, flirting with their previous all-time highs, which is just a bit higher, 484. Lululemon at these price levels, for me personally, is slightly rich. I do think that there are better options in terms of consumer retail, especially Nike is one that is a better risk reward for me. But Lululemon, I cannot say bad things about their numbers. They absolutely crushed this quarter as well. In extended trading, you can see, however, that on the initial news, they pulled back about 7% as they did give a light guidance for Q4, reiterating potential macroeconomic conditions here, and also agreeing that the consumer was not as strong as expected, despite having one of their best Black Fridays in the company's history. So they did drop about 7.5% off the initial news, and now closing only about 2, almost 3% to the downside, guys. So very, very good earnings report. We will get into the numbers. The numbers were outstanding, just a little bit of shyness on the guidance. So EPS Big beat by 11%. Revenue up 0.7%. Lululemon, before we get into that, Lululemon was a buy for me ever since they pretty much came down into the 300s. However, now in the high 400s, kind of a bit rich for me. We'll need to see a bit more of a dip for this company. I have not played this company this year. I was more focused on Nike. I do believe that Nike has better bang for your buck. But Lululemon growing very, very, very well, if I do say so myself. Now let's take a look at this. Lululemon shares fell as retailers gives tepid holiday outlook despite strong start to shopping season. So let's get into a few numbers here, right? So sales rose 2.2 billion, up about 19% from 1.8 billion, 1.86 billion a year earlier. So very good double-digit, almost 20% revenue growth. That is absolutely amazing, guys. During the quarter, sales jumped 12% in North America and 49% internationally. But the retailer's holiday guidance came in light of expectations. Lululemon said it's expecting sales to be between 3.14 billion and 3.17 billion, which is a bit shy of the 3.18 billion analysts had expected. So very, very, very slight little miss on the guidance here in terms of their revenue. Lululemon expects earnings to be between 485 and 493 a share, compared to estimates of 480 all the way to 519. So also slightly lower median average for earnings than was previously forecasted as well. So slight little miss on the two ends of the guidance on the revenue and the EPS, but that's okay, guys. We're pleased with the trends we've seen at the start of the holiday season. That being said, the majority of the quarter remains in front of us, said the CFO. We remain aware of the uncertainties in the macro environment. Here it is. We continue to plan a business for multiple scenarios, and that's why the shares pretty much had their fall. The CEO, however, said the Black Friday this year was the single biggest day in the company's history. He added that Lululemon is encouraged by the trends it has seen at the start of the holiday season. So very, very, very good report by Lululemon here, guys. If you want to take a look at very, very brief numbers, you'll see year over year, it's absolutely fantastic, right? So net revenue, we've went over it here, 19% to 2.2 billion. Very, very good. Total comparable sales increased 13%. Direct to consumer here, very, very good. Online revenue increased 18%. Very, very good. Direct-to-consumer net revenue represented 41% of total net revenue. And this is higher margin revenue, guys, when they don't have to stock the stores and go through the logistics of shipping products to stores and then waiting for consumers to buy them. When they can ship them directly from the website to the consumer, obviously it's a higher margin business for them. That's why their gross margins increased 110 basis points to 57%. Very, very, very good here, guys. And the last thing that I want to show you as well is they do repurchase a lot of their stock. During the third quarter of 2023, the company repurchased 0.6 million shares of its own common stock for a cost of 210 million. As of October 29th, the company had 243 million of authorization remaining on its previously authorized stock repurchase program. So they will be continuously updating their buybacks during this Q4. And here's another thing. About a week ago, this is what they said. On November 29th, Board of Directors approved an additional stock repurchase program for up to $1 billion of the company's common shares. And that will be happening over the next 1 year. So very solid report. You guys saw that they're growing net earnings. They're growing revenue by double digits. Very, very, very good. And they are repurchasing their own stock. Nothing but good things to say about Lululemon. My only gripe with the company is that the share price is trading slightly high. You can see this right here. Price to earnings ratio is about 58, and it doesn't really get much better even if we look on a forward basis, guys. Their EPS for next year will only be about roughly 12.18. So if we do take their current price rate for 451, let's call it 452 right now, divided by their updated target here in 2024, which will be 14, it's down to about 32. So on a forward basis, I mean, it is a bit low, but Nike's is slightly better. So that's why I'm going personally with Nike. I do think there's more meat on the bone in terms of the Nike trade. As you can see, they are still trading very, very decently off their all-time highs, roughly about 36% off the all-time highs for Nike. So all that being said, hope you guys enjoyed today's earnings. Let's get right into our stocks here, right into our major indexes rather. So taking a look at SPY, after yesterday's big red day, we were nervous about the potential loss of the 453.40 level. That was the line in the sand level. And today, bulls came up in a big way, especially due to technology bulls. So we are still bull flagging at the top here, guys. It's a very, very tight consolidation range at the top here, refusing to come down to my sweet spot 451 down to 440. Any dip buying in this area is going to be very, very juicy for the next quarter. And I'll remind you, in terms of the daily, we are bull flagging at the top, which means that your weekly consolidation is also pretty much flat. This kind of looks like this move right here, where the weekly consolidation was largely flat before another beautiful leg up. So I do think that that's exactly what's going to happen here. We may get a tiny little bit more dip, but for the most part, guys, the dips are being bought aggressively by institutional traders, and you saw that again today. So very beautiful sideways consolidation for SPY. This is a weekly bull flag, just looking for further price expansion into the end of the year and into Q1 next year. Now, QQQ, very good recovery as well. We were worried about the potential of a daily downtrend, and that would be the loss of 382.54. But now the bulls coming in with a very, very healthy day, getting back above your 12 EMA here and really saying no. Now they are potentially trying to V-shape this. So very good recovery by the bulls. No red flags on the daily. We're still watching for the daily lower high right here, potential retest of the lows. If it doesn't do that, if it just goes right back up to the highs, well, the bulls remain in full control. But if we do ever get the daily downtrend, guys, as I said in yesterday's video, that's fine. Still looking for weekly sideways consolidation. This is a weekly bull flag, and they're really reacting nicely from the previous 52-week high here, using this resistance as current support. The bears unable to gain more and more momentum and start pushing the price down. Your bulls are doing a great job of playing defense right now, guys. So this is just a weekly bull flag. Look for future price expansion to the north. This will be your first confirmed weekly uptrend since losing it to the bears down here. Now looking for the weekly uptrend. Very beautiful performance. Now, moving on to financials, guys. So financials still battling at our area of resistance, guys, 36 all the way to $37. We've been knowing this for a while that it was gonna struggle in this area, has been resistance for the better part of the last year and a half. So the thesis for XLF remains the same, right? We are still just looking for a daily higher low. Anything above 35.20 is just for a daily higher low for potential other daily leg up into this area. But if for ever which reason we get rejected and potentially set a daily downtrend, you do have nice support down here, 35 to 34.50. But if we do pull back, that's fine. If the bulls can't get this done in one clean shot, we are going for the two-step potential little retracement down here. This would be a weekly bull flag, potentially setting a weekly higher low in this area right here. Anything above 31.30, just a weekly higher low for then the two-step and then break through this resistance pattern. A lot of financials are looking very, very, very healthy, and especially with interest rates coming down here over the next potential year, guys. We'll see what happens in the SEP dot plot report next Wednesday, but should be looking very good for financials into the next year, especially with interest rates coming down. Financials still a sector decently off all-time highs, about 13-14% off the all-time highs still, and bulls in absolute full control of the daily, now about to be full control of the weekly as soon as we get this weekly uptrend. And the financials bulls on the monthly are looking very healthy after November. It's very possible December and January you get this breakthrough through this range here, and then you'll be heading back to your all-time highs, looking very good. Now, healthcare as well. A bit of a flat day today on healthcare, down about 0.12%, but consolidating at the highs using your previous level of resistance as support. We pointed this area out in the past here over the past few videos, guys. We have confluence now. We have your moving averages, the 12 EMA, the yellow line, the green. This is the 200-day moving average, right? In green right here. Confluence around the 131 to about 130 line. And then you have this beautiful area of previous resistance, which will be acting as support. And you can see every time the bears try to push in here, very, very hard for them to gain any momentum. So bulls still in full control. 1, 2, 3, very, very bullish legs up. Any move down is just for a higher low. Anything above 129.32, looking for a higher low for further price expansion to the upside. Bulls looking very healthy. This is a daily bull flag for future price expansion. And then obviously on the weekly, bulls looking very, very healthy. Not yet done. You could just be getting some sideways consolidation like the rest of the indexes before a potential other leg up. And that would bring us pretty much into the 136 area, which is the next area of resistance. Healthcare, I'll remind you, not that far off the all-time highs, still not as close to the Dow Jones, not that far, about 8% off of your all-time highs. Healthcare looking very, very, very good indeed. No red flags whatsoever. Now, IWM Russell recovering very, very nicely after two decently red days, up about 0.72% on the day. And we are still just in this bull breakout mode, right? So any move, guys, trading down here, anything above 177.35, just looking for your daily higher low for further move up. Bulls in full control of this chart, absolute full control. The bears can't even get too much done, right? We had some good momentum, but you can see the bulls are really fighting, and you can see this on the lower time frame, guys, really fighting, right? Trying to maintain this 12 EMA on the 4 hour and even on the 1 hour, right? Every time the bears try to make some ground, bulls come right back. The bears try to make some ground, and look today, they come right back. So not allowing the bears to run away with this trade, looking very, very, very healthy. And any move down, I'll remind you, if for ever which case we lose the series of higher highs and higher lows, set a potential daily downtrend. Beautiful support down in this area, right? This previous tightening range that we had. And also on the weekly, guys, weekly is just going to be for a daily higher low for further price expansion going all the way into the higher 190 area on that potential second leg up. Beautiful area of support down here. All of the moving averages, right? On the daily, I showed you, this is exactly where that range is, about 180 down to about 178. It's exactly where those moving averages are on the weekly as well. So looking very, very good. Dow Jones doing the same thing, right? Consolidation sideways. And you like to see consolidate sideways, right? Dow Jones was overbought leading into this candle right here. And now with this sideways move, we're kind of getting the RSI down ever so slightly. So this beautiful sideways consolidation is just another bull flag, right? So 1, 2, and then 3 beautiful legs up here. So any move down below here is just for a daily higher low. Anything pretty much above here, 35,000, right, is going to be for a daily higher low. You have your moving average, you have your 12 EMA on the daily. You also have this line, which is the previous 52-week high, acting as support. So any move down will be met with some decent support levels by the bulls. And on the weekly, any move down as well is just going to be for a weekly higher low. Anything above pretty much 32,300 is just for a weekly higher low to set a new weekly uptrend after being in an extended weekly downtrend for all this time. This weekly move up has created so much space that the likely scenario is just going to be a weekly uptrend on any pullback. And the Dow Jones, guys, still flirting with all-time highs, only about 2.14% off the all-time highs, looking very, very healthy. Now let's move into our big tech right away, guys. So Apple, very nice continuation on the day, guys. After a brutal, well, not so brutal, but after a nice day of sell-off yesterday, Apple coming right back with another 1% gain. Apple getting very close to its all-time highs, guys. Only about 2% off of the all-time high, so kind of matching the Dow Jones performance there. And this is just another classic case of your bullish breakout here. So looking very, very healthy. Any move down is just for a higher low. Anything above 187.50 is going to be for a higher low for further price expansion. You have all this beautiful area as support. So it used to be resistance now. Now, if the bulls pull back into it, they will definitely be sitting down on it and using it as support to launch higher, potentially towards our all-time high areas. No red flags for Apple. The weekly uptrend is pretty much confirmed at this point with this week, especially if this week closes like this tomorrow, you will have your weekly uptrend confirmed. And this is exactly the type of move I'm expecting on the indexes as well. 2.5 weeks of sideways, pretty much weekly bull flag into your confirmed weekly uptrend. Apple looking extremely, extremely bullish at this point. All time frames, monthly, looking for the monthly breakout, weekly, confirmed weekly uptrend pretty much, and daily bulls are in full control. No bears in sight, no red flags whatsoever. My sweet spot for Apple, however, down a bit lower. Gonna be tough for me to buy it up here. AMD absolutely exploding here today, guys. 10%. So I'm not too sure if this was a delayed reaction from yesterday's news, whereby they put out a competing product with NVIDIA's chips that they're using pretty much for data processing in large server farms, right? So AMD is going to do the same. They are going to be competing with NVIDIA. And look at this spike in volume, guys. Absolutely ridiculous day on AMD today, up almost 10%, smashing through your previous highs. So all of this moved down. What were we saying, guys? We were saying the 115 down to about 110 area. That was the area that I was looking to play some options. As you can see, I have been playing options over the last 2 weeks, and this week was for the 115 put. That contract is obviously very, very worthless here today, so I pocketed all of that premium, and now we are heading to higher highs. So it is now a daily return to your confirmed uptrend at this point, right? After having losing a bit of ground right here for the past 5-6 trading days, we are now in full daily breakout mode, so no red flags on the daily. Weekly, you've just confirmed your weekly uptrend push. So looking very, very, very healthy on AMD, guys. Now the bulls have everything. So we've confirmed the breakout on the weekly at this point. Next area of resistance stays put at the 132. And I'll remind you after that, guys, not much resistance all the way up to your all-time highs. You can even see it on the weekly, guys, right? This whole area is the area of resistance. And after that, it's pretty much all the way up to the 150s, 160s. So looking very healthy on AMD, if I do say so myself. And on the monthly, we are almost about to complete your monthly breakout. That will be confirmed with your break of 132.75. So everything looking absolutely outstanding for AMD. Any pullback here is just going to be for a daily higher low for further price expansion. If we do pull back, guys, now we move up the targets a little bit. I will be writing some options, potentially around the 120 down to 117, because I don't think the bears are going to be able to come back down there. Amazon doing very, very good work as well. Moving a bit sideways here today, but up 1.63% after a pretty decent sell-off yesterday. So still battling with these two lines, guys, and these lines have been highlighted for a very long time on the chart, guys. 145 all the way down to 140 is your area of support. You can see how hard it is for the bears to break through that currently. There's their previous 52-week high areas, and now the bulls are using this as very good support. So as long as this range continues being tight, I do think that this is still a weekly bull flag, right? You can see it best on the weekly here. The bulls using all of this range as support, and I do think we are due for our second weekly leg up here. Going to reset the weekly uptrend. Amazon was in a weekly uptrend almost the entire year after losing it pretty much in September and October here. And now we're going to go back to your weekly uptrend. So as soon as we break 148.77, that is going to be the return of the weekly uptrend. And then it is pretty much return to monthly uptrend mode here. The next stop on the monthly is pretty much all the way into the 160, 165 range. Amazon still decently off of your all-time highs, guys, still about 23% off the all-time highs. So has not recovered as much as other big tech. If Amazon continues to chill here, guys, I might get a little bit greedy. I might start writing the 142, 140 put options because I do want to get a little bit more Amazon shares before they start their move to the all-time highs. Loved their last quarterly earnings. Move down to Google. Google, substantially very good day. 5.34% to the upside. They were up actually a bit more than that here today, guys. At the highs, they were up almost 6.5%. Very good recovery by Google here. So we were looking at the fact that Google lost the daily uptrend and had set pretty much the daily downtrend at that point. Bears were in full control, but now look, we have a V-shape engulfing move by the bulls. So the bulls are going to be able to potentially set a daily higher low and recapture that daily uptrend. This was the best case scenario for the bulls. Why? Because now they have set the weekly higher low in relation to about 121.54. We now have the potential of a return to a weekly uptrend. Google lost the weekly uptrend after this move right here, after their earnings in October. We are now looking for it back. A break of 141.09 will be the return to a weekly uptrend, and that will also mean that the monthly breakout is almost about to be complete. As soon as we get this monthly breakout, break of 142 level, we are all the way up back to the all-time high resistance areas around 150. So very good performance by Google. The daily bulls have now recaptured so much of this move that the daily lower high is pretty much very, very likely at this point, unless they just continue on the momentum with this right away. The weekly breakout is all but complete, and the monthly uptrend is almost perfectly resumed as well. So no red flags on Google whatsoever. Amazing recovery. Very happy that I picked up my 100 shares down there. Now, Meta also with a very good day, 3%, guys. So Meta, we were worried, are the bears potentially going to set up for the daily downtrend? Daily downtrend would be a break of 313.85, and that was the question yesterday. Would they flush and set the daily downtrend? Well, the bulls still have some life left in them, so we will see. We will see how high this bounce get. Can it get as high as the Google bounce that we just saw and V-shape engulf the entire move? Or will they potentially have to two-step this, set the daily higher low, and then reset the daily uptrend right here, right? Because they lost the daily uptrend here, but the bears did not set the daily downtrend yet. So this is very, very good price action, guys. I'd like to see them get all the way back up into the 330s before taking a breather if they do have to two-step this, unless they just want to V-shape it. And on the weekly, looking very healthy, guys. We were looking for the weekly higher low, and pretty sure we almost just got it here. So going to be looking for further price expansion to the upside here. Break of 344-ish will just be a nice weekly continuation here of the weekly uptrend. And on the monthly, obviously, guys, looking very, very, very juicy indeed. So no red flags on Meta whatsoever. Still just looking for a bit of price recovery. For every which reason we dip, guys, I am a buyer of Meta, 310 down to 300. Now, moving on to Microsoft. Okay, so moving on to Microsoft here, guys. Microsoft with a very nice recovery as well, 0.6% to the upside here. After losing the daily 12 EMA, Microsoft bulls saying, no, we are not dead in the water yet. They're trying to recover this daily uptrend here after losing it after loss of the 367.49. They lost the daily uptrend, but the bears did not follow through with the daily downtrend here yet. So doing a very good job holding up the 26 EMA. Bulls playing very, very good defense. Where are they playing defense? You can see reaction zone from the previous all-time highs right here. The spot that I was targeting in case of a bigger pullback was 355 all the way to 340. Don't know if we will get there, but Microsoft looking very good on the weekly. Any weekly pullback is just for a higher low, anything pretty much above 325, right? So it's going to be a weekly higher low for further price expansion. Microsoft looking very, very healthy. No red flags at all. You guys know monthly breakout is complete as well. Weekly bulls are in absolute full control at this point as well. And now your daily bulls are doing a good job of playing defense at your previous all-time highs. So looking very, very healthy on Microsoft. We will see what happens if they can reset this daily uptrend right away, or if they do need a bit more consolidation. Either case, Microsoft looking very good. Now let's move down to NVIDIA. NVIDIA with a bit of recovery, bit of life blown into it, maybe coming from the strength in AMD. But in any case, guys, we are looking for the reversal of this daily downtrend. So bears successfully set the daily downtrend. Now we're going to be looking, can the bulls recover more of this move here and come as close as possible to 487.76. Get me as close as possible to there. You could set up for the daily uptrend reversal, right? It's either going to be a V shape or we're going to have to do this in 2 steps. So watch the size of the continuation on this little bounce here off of your lower levels. 450 down to pretty much 440 was the reaction zone that we were looking for. That was this previous area of confluence right here, right? Previous area of congestion rather, in the pretty much 450 to 440 range. And it does seem as though the bulls are playing defense off of that, playing defense off of your 12 EMA, this yellow line as well. So NVIDIA bulls just looking to protect this weekly uptrend, looking for the weekly bulls to set the weekly higher low and then further move to the upside here, guys. So looking very, very healthy after today's trading, but we will see. Can the bears continue with their daily downtrends? And I've said it on NVIDIA, the one level that you cannot cross, in my opinion, is 430. 430 is going to be the crucial spot, so I need to see the bulls hold above that and potentially rally here into the end of the year. So keep a close eye on those things on NVIDIA. Bulls doing a nice job here of trying to reverse this daily downtrend that has been started. And now our couple last ones. So moving on to Tesla, guys, here. Tesla up 1.3% on the day here today. Very good recovery day, but we are still trapped within this range here, guys. So we'll keep bringing up this range until it breaks. Range is between 247 roughly and about 230. So needs to break either way. The tightness of this range and the bullishness of the rest of the markets does have me have a bullish lean towards this range. So looking pretty good, not gonna lie. Every time the bears have tried to push down in this lower area, it does get bought up fairly aggressively. And today as well, the bulls doing a good job here. They did open red and recovered intraday to pretty much 1.37% higher. So we will continue to monitor, can Tesla come up and break this range? If you come up and break this range here and then break your previous high, 252.46, you will have a new daily uptrend set. That will be the continuation off of this one, then sideways consolidation, and then we're looking for the new daily uptrend as well. On the weekly, that would be pretty much weekly consolidation sideways, like the rest of the indexes, consolidation sideways, and for the weekly higher low to have been set here for future price improvement. So going to be looking for those couple things, on Tesla, but for now, still trapped in the range with a bit of a bullish lean. And now their 2 last ones, Palantir. Palantir finally recovering a little bit here today, 0.53% to the upside. Doesn't look like much on the chart because they didn't really do much after such a notable drop, right? But we are reacting in the zone, our previous first zone that we wanted to, 18 down to $17. Why? Because this was a previous very good area of congestion. You can see it in the past here, right? Has been a very, very good area of congestion in the past. Here was struggling as well, and most recently here. And then the next stop down is obviously the $15 level with the earnings gap fill here. So nice for the bulls to show up and play some defense. I was saying yesterday's video, the oversold lower time frames are a good indication of Palantir potentially being able to put together a little bit of a bounce. And it seems as though they are trying to bottom out and trying to bounce. But the daily bears are in full control. Any bounce, in my opinion, is just going to be for a lower high in relation to 2032. Looking for the lower high, depending on the size of the bounce, we will see if the bears are able to roll this over or if the bulls can create enough space to set up for a daily trend change, right? And in my opinion, the daily trend change setup is more likely. Why? Because they control the upper time frames. The bulls control the upper time frames. We're just looking for a weekly higher low. Anything in relation to 1455 is for the weekly higher low for weekly continuation to the upside here. So Palantir looking very good. This has been a very, very good dip buying opportunity, still down about 22% off of your most recent highs. And that's the only reason why I do favor a reversal here on the daily time frame, just because the bulls control the monthly and the weekly. So the lean is definitely bullish, but once again, they need to prove it. They need to reverse these lower time frames, need to set up for the daily trend change. And lastly, PayPal. PayPal down at about 1.76% here today, still trapped in our little bit of consolidation range here, but we've seen a few names tighten up like this, guys, in the past. Tesla and IDOM Russell. And when the rest of the market is bullish, usually these patterns do break bullish here. So very nice to see them tighten up. Very nice to see them hold this yellow line right here, the 12 EMA. So PayPal with some very decent performance. Can't say anything bad about them. They're just being very, very tight. So we are going to need eventually a break of 60.24. That will let us resume the daily uptrend and let us resume this continued weekly breakout pattern as well. We are just trying to get as close as possible to this 64.50 level right here. Get me as close as possible. Then the bulls set up enough space for a weekly engulfing move. Either they'll V-shape it completely or they'll be able to two-step it, something exactly like what they did right here. So PayPal looking good on the weekly, getting above our moving averages ever so slightly. Just need this daily move to confirm here, guys. Once we get above this zone, guys, I think we will be clear to move higher into the mid-60 zones. As soon as PayPal gets into the mid-60 zones, guys, I can be more comfortable in saying that we are more than likely going to reset the weekly uptrend and get some bit of price action to the north, as long as the rest of the markets do provide some good macro as well, and especially some good data on interest rates and inflation, because PayPal is sensitive to those. So that's everything that I had for the technical analysis, guys. Let's look into my portfolio. So guys, taking a look at the portfolio, you can see that we are doing very good for the week as well here. So year-to-date performance stands pretty much at very close to 50%, 49%. We need to close above this 50%. Keep in mind, I have withdrawn 15% of the portfolio over the course of the year. So true performance, is roughly around 65% right now. So very, very good performance. Can't be mad at that. We are outperforming the SPY. You can see SPY here down about 18.5% to the upside. So we are very good at outperforming the SPY, which is our benchmark. And we are now also outperforming the buy and hold QQQ people. So outperforming the NASDAQ as well. NASDAQ here with 36% on the year and us up at 49. So now we're creating a bit of space between us and the NASDAQ. Very good year to date. Let's wrap this up good in December, guys. And I do think we do have a bit more to gain here. Now, looking at the portfolio positions, you will see that some of the positions that I brought up on Monday are still here, and I did change a few around. So let's go over those quickly. So Palantir, 17.5 puts, you see that they're still on, guys. So if Palantir closes below 17.5, I will be picking up 600 shares of Palantir at this price. We will see what happens tomorrow. Now, Rivian, the December 8, 16.5 puts that I sold, they are almost worthless. Rivian trading about $19 right now. So these are pretty much just be pocketed premium, helping to lower the overall cost of my existing 200 shares of Rivian, which are down there. We'll cover those lately. So that's pretty much a good position. Here's what I redid in Rivian today. So Rivian, I actually rolled my calls. You see here that I had the 18.5 calls for this Friday. So what Rivian did today is they came up very, very nicely into the $19 range. So roughly about midday, I had a choice to make. Do I wait until tomorrow and let these shares be called away, or would I like further price participation to the upside? I chose to go with further participation, going to be rolling the call. So here's exactly what I did on the position here, guys. You can see that we bought back the 18.5 calls for 68 cents, and we sold the 19.5 calls for 65 cents. Essentially what this means, guys, is that I was able to get $1 higher in strike price. So I'm able to sell my shares $1 higher if next Friday they close above 19.5. I will be called away at 19.5 instead of 18.5. What was the cost of doing this trade? 3 cents per contract. So on a net basis, it's $1 minus 3 cents. So I pocketed an additional guaranteed 97 cents of premium if we close above 19.5 next week. That is very, very good ROI. That is why I rolled the calls. So we will see how we do. My average cost on Rivian still stays at about 16.96. So a sale at about 19.5 would be very, very juicy, guys. It'd be about $2.50 roughly per share, guys. So that'd be very, very good. About quick $500 on 200 shares of Rivian. Very, very good ROI since the time I've held them. Now, BABA, I took a little cheeky position here. The 71 puts, they were trading at 14 cents on the day. So I did choose to get them later in the day here, guys. BABA, 14 cents. It might not seem a lot of premium, guys, but if you put this on a weekly basis, 14 times 5, right? That's roughly about, about 60 or it's about 72 cents, something like that, right? So very, very good performance here by the BABA ROI, right? It's almost 1% on a weekly basis, but since there's only one trading day left, I went with this. I'll remind you, BABA, I do have about 100 shares at an average cost of 81.65. So this is just going to be lowering the average cost. I do think BABA, as voiced in yesterday's video, has a very good chance of recovering from these lower levels. Very oversold on the daily, so we are taking a chance with some more BABA shares. Now, CELH as well, took a little position here, brought it up in yesterday's video. CLH 49.5 puts for tomorrow. Wrote them for 40 cents. Only one contract though, wanted to go fairly light. Only one trading day left and they might drop a little bit more. But here is your 49.5 level, right in that support, like I was saying in yesterday's video, right down in the area that I want them. So we'll be writing a few more of those if we do stay down here. As of now, so far so good. Trade Desk 66 puts. Wrote them at 31 cents early in the week, trading at 6 cents. Why? Because Trade Desk is up in the $68, $69 level. So not really any risk of being assigned unless tomorrow is a terrible day. Looking good on that front as well. UPS 157.5 calls. We'll see how those go. UPS currently ended the day 156.50, so not yet up to my 157.5. If they close above here tomorrow, I will be called away on those shares, but we will most likely roll the calls if ever we're above there. If not, if they close below this, we just pocket all of this 86 premium, and we'll be writing more covered calls tomorrow, up very, very nicely on my UPS position so far. I'll remind you guys that my average cost on UPS now is all the way down to about 145. So currently up over $1,000 on UPS, doing very, very good. And now AMD, these AMDs were closed out as well. The 115 puts that I had earlier in the week, you remember me writing them for about 97, 98 cents. They were closed today on a auto close, pretty much first thing in the morning, 9:30 a.m. auto closed for 8 cents here. So that was a 90% take profit, which was programmed on the trade. So closes position very well. This Rivian call was just the rolled call to the 19.5s. And Starbucks 94, they were automatically closed as well at the open. You can see Starbucks, I did write these Tuesday rather for 47 cents, and they took profit here, pretty much 90% profit on the morning at the open here for 5 cents. So pocketed all that premium as well. And you can see all the rest of my positions are still here, guys. We still have the 20-year yield play for the bonds, the BABA shares, the CP, which I'm still holding, currently still in profit here versus my average cost. Google, substantial gain now, guys. We got in at 133.85 off of that assignment from the 134, now all the way up to 130. I will be riding these for the foreseeable future, guys, and then maybe writing some calls in the 140 areas. And now UPS, obviously we just went over that. PayPal, still holding PayPal, still holding the Rivian shares, 200 shares down here. You see that right here. And now CSIQ, not high enough yet to write some covered calls. My break even is around $28 on those. So still just riding those. And now my Canadian banking ETFs, almost back to break even. Very excited for those. Will be paid a dividend tomorrow. So tomorrow you will see 1,006 shares as I reinvest my shares. So that's pretty much everything I had for you guys today. Hope you guys enjoyed the video. If you did, consider dropping a like. Really appreciate it, guys. And also consider subscribing to the channel. If you're new here, we'd love to have you. Almost 500 subscribers, guys. Big milestone for me. And as always, if you have any questions, feel free to leave them down below in the comments, guys. Macro, technical analysis on anything, stocks, or options, I got you. Just leave it down below in the comments and I'll get back to you within 24 hours. So I'll see you guys tomorrow on Friday after the close. Big job numbers tomorrow. Let's keep an eye on what happens. Take care and peace.